Amy here. Today we're going to talk about the tax treatment of virtual currency when it is donated to a charity. Now, as we all know, charities accept lots of different kinds of donations. They accept cash, in which case you get to deduct the value of the cash. Now, this is if you itemize. These are itemized deductions. I want to be very clear. There's no tax benefit here if you don't itemize. Now, most charities also accept, property like household goods, pots, pans, clothes, things like that. And we typically deduct the fair market value of the items that we've donated. Actually, it's technically the lesser of your cost basis or the fair market value of the property. So for example, if I paid a penny for the pair of jeans and the fair market value was $10, I only get to deduct a penny. All right, now there's kind of a special case for certain kinds of property, appreciated property. Appreciated property is handled very differently and in a very beneficial to the taxpayer way. So the first question we have is, does virtual currency count as appreciated property? Property is capital gain property if you would have recognized long-term capital gain had you sold it at fair market value on the date of the contribution. So basically this is an appreciated item of property like stocks, bonds, jewelry, stamp collections, cars and furniture, things like that, but something that has actually increased in value since the time that you bought it and you've held it for more than a year. So my opinion is that if you've held virtual currency for 366 days or more, it would qualify as appreciated property. As we know, the IRS has defined virtual currency as property. So virtual currency qualifies. The question now is, why do we care? We care because when you donate capital gain property, you get to deduct the fair market value of the donation without paying tax on the gain. So if this charitable contribution has a merchant account that lets them accept virtual currency, you donate virtual currency as property. If you've held it as for a year or longer, you get to deduct the fair market value of that currency as of the date of the donation without paying tax on that capital gain. A couple of important things to remember: if you've held that property for less than 1 year, you still only get to deduct what you paid for it, so the holding period is important. The second thing to remember is that when you donate property, you have a limit as to what you can deduct in any given calendar year, which is 30% of your adjusted gross income. If you've donated more than that, the rest rolls forward for future years. Another thing to remember is that when you donate property, you have to fill out a special form that goes along with your Schedule A describing what properties that you donated. Another thing is that generally if there's a donation of more than $5,000, the IRS wants us to get an appraisal. This is kind of an interesting point. Things like stocks and bonds, the IRS doesn't require an appraisal because the fair market value is, kind of on an open exchange, and you can just Google it and find out what it was worth. So one of the questions we have is, will the IRS require an appraisal for virtual currency as property, even though there is an exchange, many exchanges, that tell us what the value is? At this point, this really is unknown. Obviously, tax law is in its infancy with respect to virtual currency. We haven't had any court cases on this yet. I guess my opinion would be that if you can document what the fair market value is as of that date, print screenshots, whatever, you're probably going to be okay. But we're waiting on future court cases to tell us for sure. Don't forget that I have a book that can help you understand your virtual currency tax obligations. It's called Virtual Tax, the Taxation of Virtual Currency. It's available on Amazon and on Barnes & Noble. Now for the fine print, these are general tax principles. Talk to your tax preparer before applying any of these principles to your own tax return. I am not responsible for any tax return that I have not prepared. Hey, if this presentation was helpful for you, hit like. If not, tell me what you didn't like so that I can do better. Share this with your friends who could use the information. Thanks for listening.